it going, everyone? Thursday financial thing live stream here on YouTube, July 23rd, 2020. Um, yeah, for everybody that's watching this in the future, this is a live stream that we do every week. We talk about latest peer-to-peer lending news, what's going on with the platforms that we invest in. We talk about some stock market things, maybe some Bitcoin, in general, investing, anything that sort of comes across the discussion table. And as always, every week I try to make the stream less than an hour, which I fail at miserably and usually lose a bet. So we'll see if that changes this week. So, what are we talking about this week? Hi, welcome to everybody, by the way, on the stream. As always, put your name in the chat. Let me know where you're coming in from. And it's nice to see everybody here as always. We're going to talk about today rate setters Q, the exit Q, what's going on with that. Talk about the Growth Street news that they officially are going to be winding up their business as they were unable to find additional funding to continue with what they were doing. Talk a little bit about Property Crowd, Chinese peer-to-peer lender who is launching an IPO in the US. And today we'll get to the top 5 complete platform wrap up of the pros and cons of the different peer-to-peer lending companies and investing companies that appear on my current top 5 list. We'll do that today. And we'll talk a little bit about Invest and Fund, Lending Works, Blend Network, LoanPad update. Hopefully that sound is probably me kind of moving away from the mic, but hopefully it sounds okay. Let me know if the sound is okay for you on your end. Do a quick roll call here. See if you can hit that thumbs up button, please. I would appreciate it. It helps with the YouTube algorithm. Move the mic a little bit here in front. So Tony, hi. Tony is always in Somerset. We got Colin Perry in the Peak District, always damp up there. You must have very green pastures up in the Peak District, because it always seems to be every time you get on the chat, you're always saying it's raining. So actually, it's rainy here in Florida today as also. So Stephen Solihull, Stephen also in Southport, and Aki Chappie as always. He always says, hit that thumbs up button for me. I appreciate that. Alan in an overcast Basingstoke, Norman P in sunny and windy Sussex, John in Nottingham, Peter in Leatherhead, and Mr. Brian in Woburn, David Kennedy here in Norfolk with a cuppa. What is everybody's preferred tea? So when I go back to England and I come back to the US, I always bring tea with me, and I'm always a little nervous to try out different tea because it's not like I can just, if I'm here, run to the shop and go get a different brand of tea if I like it. So I tend to always stick with the Tatley. I think I tried the PG Tips last time. I wasn't feeling it as much, but maybe there's some other amazing cup of tea bags that I haven't tried that you know about. So I can give me a recommendation. Yeah, so we're going to get right into it today. If you have any questions or comments, put it in the chat right down there, wherever it is. And let me know what you're feeling with your peer-to-peer investments at the moment. Do you feel confident? Do you feel insecure about them? Is there any companies that you're considering dipping your toes in, or any that you're particularly anxious to get out of? Chica Boy, hi. Nice to see you from Folkestone. Folkestone. There we go. Get that right. And Alan says salon tea is light and tasty. Yeah, I've never tried that before. Tetley or Yorkshire. Yeah, me as a Humberside lad, I feel like I should have tried Yorkshire tea before, but haven't. M&S, huh? Tesco. Gosh, I mean, you just all these different tea brands. It must be hard as a tea company to get everybody's business because there's so much competition. And I would imagine, do you think if you had a blind taste test with different cups of tea with different tea bags, you actually be able to tell the difference? I don't know if it's PG Tips. Hi, Paul and Kenilworth. Nice to see you. John Day says Builders. I don't know what that is. Is that a tea brand or a peer-to-peer company? Vince, Sainsbury's Red Label tea bags. Tesco's own original. Wow. Huh. I'm going to have to try next time I come over. They don't have Sainsbury's over here, and I don't think you can ship it. Be expensive. Yes, I do. I do actually like green tea too, but I like the powder, the matcha powder. It's supposed to have 100 times more antioxidants than regular green tea bags. So you get the powder, you get a little whisk, and you mix it up. It's called Japanese ceremonial matcha tea. If you try it, it's pretty good. It doesn't quite have the same taste though that a breakfast tea has. Hi Sue in Wet again, North Staffordshire. Sounds like you're having a rainy, typical British summer. And Builder's tea is you can stand your spoon in it. I don't. I mean, that sounds terrible. Just going to be honest. But anyway, let's get right to it. What do we? Kind of a quiet week this week in peer-to-peer lending, but a little bit of news. So it's kind of an interesting time right now. I don't know if you've ever heard this, but they say when a business startup occurs, that it usually takes them about 5 years to really figure out if they're going to be able to survive or if they fail. And we seem to be hitting that 5 year mark with some of the companies now that are wrapping up their businesses or changing, pivoting to a different path. So I think over the next year or two, you're going to see more companies decide, is their method of peer-to-peer lending profitable or is it sustainable? Um, and I think, when I first started lending, I thought that the companies were very, very long term sustainable. All of the companies I invested in, that was a very naive view. Of course, looking back now, but um, what we're seeing is this sort of contraction in many ways of peer-to-peer lending, and the companies that are able to make a profit, the ones that are moving forward, and the ones that are seeing after 4 or 5 years that their business is just not profitable and probably won't be in the future. Some of them are actually winding down their businesses or changing pathways. So this week we saw the announcement from Growth Street that they would be winding down as they have failed to secure the lending that is needed to sustain the business. And they put that down to the challenging economic conditions that COVID has presented. And they're going to be entering a solvent wind down. Now, for anybody that has money in Growth Street, which, if you've been watching the stream, I was one of the very lucky ones that for some reason they exited me out of there very quickly. I didn't have a huge balance there anyways. I started to withdraw in November 2019 after the CEO, Greg Carter, quickly, mysteriously exited the company. And Greg was kind of my go-to guy within Growth Street, so I had a great relationship with him, and I didn't really understand why Greg was all of a sudden out of the picture. When weird things happen like that with companies, I tend to get sort of cold feet somewhat and become more watchful. So I exited out for most of my funds at the end of 2019, and then the remaining funds were paid back. Um, I think in June. June was when I got paid back. But what are we going to see now? That's the big question. I think the challenge for Growth Street is obviously going to be refinancing these businesses that are on a 30-day revolving credit line. And You think, well, can they go to and get the CBILS business loans from the government? Perhaps they can, but the problem is for them that those businesses aren't really. I don't think they wanted that type of financing. They wanted more of a revolving credit line and CBILS lending, which is government loan backed loans, are different. So the big question is Growth Street going to be able to refinance those companies out of those loans in order to pay back investors? Um, the information that we see coming about Growth Street seems to be pretty optimistic. It's good that they're doing a solvent wind down. That doesn't really tell us a lot at the moment. Just tells us that they're not going into insolvency, which is the best thing for us as investors. And if you have money within Growth Street, you definitely don't want to see an insolvent wind down because that involves administration. We've seen how that goes with companies like Funding Secure, Lendy. It's just not good. Obviously, a different type of lending, but still, anytime you can avoid it, insolvency is a really big win. So we're going to see in the future, can Growth Street pay people back? I believe that they will be able to do it. I have an optimistic view that they're pretty experienced when it comes to relationship lending, and maybe they have some places, some assistance to their original borrowers to get them out of those loans. So we're going to see if Growth Street could put their money where their mouth is and just get everybody repaid back. That's what I would like to see. Let me check the mic level. I don't know if the. So no, I don't have a new mic. I've got the existing mic here, but hopefully you can hear okay. Could be the internet. It's a bit stormy outside, so apologies if there's any sound issues at the moment. It's YouTube. You can blame YouTube, but hang on. Let me listen. Check. Yes. Maybe I should turn up the gain a little bit. I don't know if that is any better for you. Hold on. Let me try to mess with. There we go. Try. I don't know. Let me know how that sounds. See, maybe that's a little bit better. So that's where we are with Growth Street this week. We also had a keeps going up and down. I don't know why that's happening. I don't know why it's going up and down. Like my sanity levels this week have been up and down too. Maybe it's directly correlated. But yeah, so this week we also had announcement that Property Crowd, not to be confused with Crowd Property, same sort of name, is going to be ceasing retail in peer-to-peer lending too. Um, Property Crowd was always a company that I had high hopes for, and I went to visit them several times. I had a good relationship with Scott Trapnell and also the CEO there. The thing about Property Crowd is they had two different businesses running within the company, and one of them was more to do with equity property shares that were going to be traded on an Asian, I believe it's Singapore stock market. So they wanted to be able to make property tradable in sections and pieces, and um, so that was their business plan. And I think the Property Crowd part of the business model wasn't necessarily what they wanted it to be, but they were trying to really move it forward. So what Property Crowd said this week is that due to regulations, they are going to have to cease their retail peer-to-peer lending. Um, Now, I don't know if it was due to the regulatory issues, or maybe that was their way to sort of exit out of that market. Maybe it wasn't working for them. I don't know. I always kind of held off from investing with Property Crowd, even though I had a good relationship with them, because it it didn't necessarily um, appeal to me as much as I would have liked. So but I did have a good relationship with them. But they are going to be closing their retail peer-to-peer lending side down. Don't know what that means so far. I think it means that, obviously you're going to have access to cash that's in your holding account, and then the loans will just mature out. Hopefully, everybody will get paid back as they should. So that's two announcements of sort of winding down loan books this week: Property Crowd and Growth Street. High hopes for both companies that they will pay everybody back. Somebody emailed me or posted a comment on the Facebook group. By the way, if you're not a member of the Facebook group, Financial Thing Facebook group, come in and join us. Come in and join us because we have a good chat about all things investing on the Facebook group. Also, Funding Secure Action Group. Again, if you're not a member, join up with that. The Lendy Action Group. Facebook, join up with that. Highly recommend it. I am a member of both. Lots of good information. Thank you, Craig. Yes, everybody hit that thumbs up, please, if you can. Doesn't take a second to do. It makes me feel validated. That's the main thing. Screw everything else. I have to feel validated, like I'm making a difference in your lives. So, giving me a thumbs up makes me feel validated. Kind of like that really good looking girl that talked to you in school. You just felt a little bit more validated. Or man, a good looking boy if you're a woman. So, but yeah, Property Crowd, again, hopefully they will do the wind up as needed be. And we can leave with a good taste in our mouths about them. So if you're in RateSetter and you're looking to try to exit, you've probably seen some pretty good movement this week. The 5-year is definitely moving quicker than the Access account if you're trying to exit. I've moved up 332 spaces in 8 days in the 5-year, so I'm getting closer to being able to exit. Yeah, I've had a couple of questions about why I'm actually exiting out of RateSetter because it was a business that was on my top 5 list for a long time. But honestly, for me, it's just the rates at the moment. There's uncertainty with what's going on with RateSetter as far as their possible deal with Metro Bank, which we again haven't heard anything more about, and I don't think we will anytime soon. It's a lot of due diligence has to go into a deal like that, so I don't think you'll hear much of anything. But yeah, so I just exited because the rates are crap. I mean, Access I'm getting 1.5%. The most you can get is about 2. It's just not worth it. So hopefully things will change once COVID starts to settle down. The beautiful thing I love about peer-to-peer is even if you do exit out, you can always get back in at any time, right? Say the waters tend to calm down in the next 3 or 4 months, just enter back in. I don't see any need to take any unnecessary risk. I'm not saying rate setters is in any kind of trouble. I don't know if they are or not, but I'm just looking at the rates and they're just not exciting. So good thing is the exiting is going really well. They've exited out £2 million just this week so far, and about 1.2 million in the last 2 days. I think I'm about 208 spots from exiting out of the Access account. And I post an update every 2 or 3 days on the Facebook group. So if you're in RateSetter, it's good to be able to see what's going on with the queue. And also if you're something you're considering in the future, it's nice to know that the exiting is happening during a time of severe economic troubles, which is what we want to see. I mean, this is the big test right now, peer-to-peer, right? If a company can do okay and during this time and survive through and get people paid out when they want to get paid out, then that's a pretty good case scenario for um, for the future. So I think if rate setters survives through this, and let's say they don't do their deal with Metro Bank, and the rates go back up to a somewhat decent level, I think rate setter is not a bad place to put your money. But I was even withdrawing out before the rates got cut in half, because even at you know 3% access, I just wasn't particularly happy about it. I also don't like the way there's an exit fee on the 5%, and also the plus and max to get out of there. I think that you know I don't want to have to pay a fee to get out. I understand why they have them. It's revenue generating for them, but fees are fees, right? We don't want to pay fees if we don't have to. So I just think there's other places that I personally found that I could put money. And the peer-to-peer space is pretty competitive right now. So, you know, there's that. Other news. So LendingWorks, I finally was able to check my statements to look at interest paid, and I haven't gotten any interest since April. April was the last time. Zero in May, zero in June. No indication of what's going on with LendingWorks. So I've dropped them a lovely little email to say, what the hell? What are we doing? What's going on? Do you have any updates? Because it's been a while. So that's LendingWorks. One of the companies that I've kind of been really impressed by recently is Blend Network. I like that communication. They send out a lot of emails with good economic information about what's going on in the housing market, and their deals seem to be decent. I haven't looked too much into them because I haven't invested through Blend yet, but I do like their communication. They were featured in a Financial Times article recently, and in their latest update email, they said they have 17 deals under due diligence right now with lower loan to values than pre-COVID lockdown. So that's kind of Blend has been on my watch list for a while, and it'll be interesting to see what happens to them in the next couple of months. It's probably a company that I'm going to dip my toe in the water. Not quite yet, just kind of waiting to see what happens over the next couple of months. It seems like COVID's starting to really, excuse me, slow down in the UK, and if that continues to remain under control, things start to get back to some kind of normalcy, then Blend would be a place that I'll definitely be looking at. So we'll see. LoanPad is just slow and steady. They've increased their loan book back to 25 loans, £33 million loan book. Loan to value is still an extremely rock bottom 28%. They seem to be adding about 28 to 30 lenders a week. They've got one loan on default on their books. It's only £150,000. One thing that I love about LoanPad is that the loan pieces are smaller. You're not dealing with a loan default that's £1 million or £2 or £3 million. 150K is pretty manageable. 3 extended loans, 2 loans that are overdue, and 11,000 in interest is being serviced by their interest coverage fund, which is their equivalent of provision fund. They've got about 40,000 in that fund, so there's plenty of money to cover that one loan. And since it's only 150,000, the interest is relatively low. One disappointing thing about LoanPad, and I think again this just comes down to the loan supply and demand, is I still have about 12% of my funds sitting in cash waiting to be invested. So you're losing a little bit of returns there to cash drag, but small price to pay for a company that seems to be continuing to do fine through this COVID situation, and still less than a 1-day exit possibility if you try to get your money out of there. It states that less than 1 day to get out. So looking good so far. I'm very, very happy with LoanPad. Obviously, I wouldn't put my entire life savings into LoanPad or any one peer-to-peer company, but for a diversification play, I'm super happy with it. And another piece of news. So Invest and Fund was a company that I had communication with about 4 weeks ago. Graham Martin over there. And I was really impressed by what I'd read about them, um, the credit team, the due diligence that they do. They reminded me a lot of crowd property, the same kind of high experience and due diligence. So we get a piece of news that says Investment Fund receives a 5-star de facto rating. De facto is a company that analyzes investment product offerings and then gives them a rating from 1 to 5 stars. What I don't like about de facto, aside of the fact that it's very difficult to spell because there's a Q in there, I can't. There's those words that you try to spell out, no matter how many times you do it, your brain just wants to do it a different way. De facto is one of those companies. So de facto has some peer-to-peer lending companies on there that they rate: Assets Capital, Crowd Property Lending Works, Octopus Choice, PropLend, all get 5-star ratings with them. They also rate RateSetter, and what confused me was Rebuilding Society got a 5-star de facto rating, which I don't really understand how. I'm not saying anything negative, Mr. Rebuilding Society, if you're out there watching. This is not a knock on you in any way, but in my opinion, I don't really understand how de facto rates Rebuilding Society with Octopus Choice in the same sentence, because they're two different beasts, and one is much higher risk than the other. Rebuilding Society I consider to be much higher risk than Octopus Choice. But they also only do their rating once a year, so they do them, I think, in February to February. So it's questionable. I don't know how much weight I would put on a de facto 5-star rating. They also have Funding Circle and Zopa at 4 stars, which, I mean, is Funding Circle's investment product a 4-star product? I don't think so. Um, so they've got Archover, the money platform, Relendex, and Unbolted all at 1 star. So, I mean, yeah, what weight do you place on de facto's 5-star rating? Uh, and then somewhere in the middle of the 3-star range, CrowdStack, a lending crowd, Money and Co, House Crowd, Able Rate, Capital Stack is crowd to fund, folk to folk, which they wrote this. Yeah, I don't know. I don't really place too much weight on stuff like that, but it's nice for them to get a 5-star rating, Invest in Fund, because it is one of the companies sort of on my watch list that I think is is a pretty solid property peer-to-peer platform. So that's what we have with that. I'm going to read through your comments real quick, and then we'll do the little platform wrap up of the top 5 pros and cons where we stand right now. Hopefully the sound is a little bit better now. Hi, Mike Powell. Nice to see you. Craig Graham. Nice to see you too. PC, we're offering 0 coupon bonds, which as non-realizable securities are touched by the new regs on bonds, as they are complicated products. Yeah, not suitable for retail. That makes sense. I think it was difficult for many retail people to understand what exactly Property Crowd was offering, because it wasn't really a peer-to-peer lending product, so it didn't fall within what the FCA considered to be a suitable product for marketing. David Kennedy says, how's my share picking going? What does it say in your crystal ball? Oh, hold on. Okay. So the crystal ball, the crystal ball said there's a 50-50 chance that Tesla gets added to the S&P 500 and that they see a massive uptick in their stock price. Lloyd's Bank will probably get no higher than about 75p. And What do I like at the moment? Let me look on my list. Hold on. Of course, always the index trackers. Always the index trackers. What's on my watch list? Speculative plays, some biotechs, CRISP, CRSP has been doing well. Some dividend stuff like AT&T in the States, Verizon Wireless. But again, those are really only to do covered calls options with. I wouldn't necessarily want to hold them forever. VMware, Fastly, FSLY, and C Unlimited SE. If I was picking stocks today, that would be a few that I'd have an eye on. But I don't have any crystal ball, so Well, I do, but it's not. It's not actually a real crystal ball, in case you're wondering. Disclaimer: none of this is advice in any way. This is just information. Let's see. So Mike says high net worth and sophisticated aren't usually considered retail, so it does look like an opportunity to leave the market has been taken. I was always confused about that, Mike. So, because when you sign up for a peer-to-peer company and you go through the little questionnaire, right, you can check yourself off as a high net worth or a sophisticated investor very easily. I mean, you just answer a couple of questions and you're done. I can say I'm high net worth when I'm may or may not be. I wish I was high net worth, and am I considered sophisticated? Who knows? What is considered sophisticated? Somebody who knows what they're doing, somebody who's been doing it for a while. So I'm able to check a couple of boxes, and all of a sudden now I'm high net worth or sophisticated, and now I'm not retail. Yeah, I don't really understand the FCA's stance on that. I think it's pretty weak. So I've always been a little bit confused as to why, or if high net worth and sophisticated investors are not actually technically retail, because they really are at the end of the day. Maybe there's some language in FCA regulations that says that they're not, but I've always seen high net worth and sophisticated as retail. I mean, they're not institutional, right? So I look at there's retail and there's institutional, and high net worth is not considered an institutional. I would have thought. Oh, Chica boy, not with the crystal ball jokes. Oh dear. So Oling says, I don't see peer-to-peer as a viable option anymore. The platform risk is too great and the level of fraud was an unknown for me. Funding secure is not something I'm comfortable with, or, for example, funding secure. Yeah, so what I would say about that is there's definitely risk involved. I mean, you're just not going to get percentage returns without taking risk. Fraud can exist within any type of business, any type of investment, including banking, stock market, bonds, whatever it is you want to pick. Obviously, there's companies that have been around a lot longer than others. I think just what's going on right now is we see a greater level of due diligence and history to really make an informed decision about whether a company is actually good or what they're bad. Now, you do have to take some chances. I understand too, there's the argument, and as you wrote, Oling, about taking my chances in the stock market after very bad experiences. There's that, yeah, absolutely. But there's also the side of the equities can be very volatile and that you can, lose 30 or 40% of your capital investment only if you sell, because you only lose if you sell. But I've always kind of gone through the standpoint that 10 or 15% of my liquid investable assets would go into more of a speculative investment, like peer-to-peer lending or also Bitcoin. So, and I do think there are some good peer-to-peer companies out there. I really do, that will survive and do well. I think there's some questionable ones out there that I probably would never put money in anymore. And if I could change my portfolio around right now, it would be much more heavily weighted to the companies that are on my top 5 list than my previous strategy of kind of just spraying little bits of money across 15 or 20 platforms to see over the long term which ones were reputable. And problem with that was at the beginning, the weight of percentages of money that went into the different platforms were never even. I got um, a little bit too spicy with the Lendy at the beginning. The money thing, my money thing allocation at one point was 25% of my portfolio my first year of investing, which I had a wake up call one night after I had a nightmare of money thing leaving to a desert island with all of the cash. So I got up the next day and sold all the loans that I actually liked. I used to like the pawn shop loans, and so I got rid of a bunch of them and really reduced my investment. Um, so I think the diversity argument is real, but I think you're just going to see this contraction of the peer-to-peer lending industry. And we had a report this week that the Treasury is going to do a review of the alt finance industry because it wants to really see fintech thrive in England and the UK. It's a £7 billion industry that the government wants to support. So we've had some bad experiences, unfortunately, with um, Funding Secure and Lendy doing. Well, I don't know if Funding Secure did fraudulent things. I don't want to make accusations I don't know about, but it seems like Lendy certainly has. And a lot of people are going to be, um, concerned to try to invest in new companies in the future because they've gotten burned. But I think you'll see a new influx of investors who will stick to the more secured companies that have done better through this COVID time and who show the ability to be able to survive. But I don't have a huge percentage of liquid assets in peer to peer myself. So majority of my investments are in equities, particularly index trackers. Nice to see you, Aki Chat. Good to see you here. So Paul, welcome Paul. Glad to see you on the stream. Says Funding Circle just went down to 2.7% interest on my loans. Yeah, not surprised. Funding Circle is kind of on that downtrend. I've been writing about Funding Circle for probably the last year that it was not a place that I thought had any that I really wanted to put money. I got a tiny little bit of cash in there that I think is probably in bad loans at this point. Norman says he's not investing any new money in Pittsburgh at the moment. Winter's coming. COVID will return. Yeah, we shall see. See what happens. No crystal ball on that one. Yeah, Craig Graham blend does look interesting, but slightly put off by £1,000 loan minimum. Yeah, that is one of the downsides of blend, but I think that you would just have to do more due diligence on the loan and try to stick with something that looks like it makes sense on paper before going in on blend. I've thought about shoving a couple 2-3 grand in there, just buying 2 or 3 loans. You obviously can't get really diversity in blend without putting in 10,000 plus, which for some of you may be no problem, but for me right now, I'd probably be looking to do a smaller amount, but just to test the platform out. But if I have any faith in what Blend does and that due diligence process, I would probably be okay kind of picking out 2 or 3 loans for testing purposes and see how it works. Yeah, and I certainly wouldn't blame anybody for saying no. I wouldn't put another pound into peer-to-peer at this point because of the uncertainty of the economy. I mean, sitting on the sidelines is okay, and not getting back in is okay too. I mean, it's whatever you're comfortable with. I'm still okay with the amount of risk that's happening. Jonathan Harrison, welcome to you, sir. Nice to see you. When's assets haircut market opening? I want to buy loans with a 10% discount. See now, Jonathan, that's an opportunistic view of looking at things. While all of us are thinking, how much are we going to lose when we want to exit, or if we want to exit out of assets, is um, access accounts, which I personally won't be not exiting. I'm just going to stick it out for the long run. But yeah, it could be a really good opportunity right now to buy some loans at a discount if you're willing to do that. Warren Buffett always says that you buy when other people are selling. That's the best time to buy. John Day said LoanPad just advised they've amended terms and conditions to address the Shira and Jewish market conditions. Yeah, so if you're a loan pad investor, you probably saw some changes to the terms and conditions to say that there's some things in the Jewish law which don't allow people to pay interest to another person if they're both Jewish. So they're addressing some of those in the terms and conditions. Not really a big news, but something to note. Mike Powell says no cash drag on loan pad except while you wait to get your £10 minimum. Well, so Mike, I've had about 12% of my portfolio sitting in cash waiting to be invested now for 2 months. So I've had some cash drag. I don't know if everybody else is experiencing the same thing, but I don't know if there's a problem with my account or if it's stuck. I'll probably drop somebody at LoanPad a note tomorrow to find out. So Chica Boy says we all have to wear masks in the shops tomorrow. Everyone will look like Donald Duck. Okay. If you put on a yellow raincoat too, that would probably make you even more look like Donald Duck. Yeah, Aki Chap, if you can send me a link to the page that had the broken links, that would be helpful because I've got a bunch of different links to the index trackers throughout the website. So when someone says the links are not working, it's a little bit difficult to find. So if you can send me a link to the page where you found the links that were broken, please do that. I'd appreciate that. Gary says, I don't know anything about investment fund. Anyone with experience with them? Yeah, so I did speak to Graham over there a few weeks ago. They have a very strong credit risk background, 8% returns. The only thing I didn't like is they have a 3/4% fee. It's not wonderful, but they've got to make money. They have a resale market which you can buy and sell loan pieces at par, so no discounts, no adding on. They have a pretty tough questionnaire too when you're opening the account with Invest Fund. That questionnaire is pretty tough, which is a good thing because it means people that don't know what they're doing probably won't make it through the questionnaire, and they probably shouldn't be investing anyways. And I wrote another note which I just can't read my handwriting. It says something is paid out at the I think I've written that interest is paid at the end of the loan term, so that would be kind of a downside. You get paid out at the end, not monthly. But they seem to know what they're doing. We'll see. So I'm just going to go through a quick kind of wrap up of my top five and what my current pros and cons are and why I'm invested through those companies. So on my top five, I'm just going to go through. Firstly, LoanPad. I talk a lot about LoanPad. What I like about LoanPad is the liquidity. Number one, has always been good, and it continues to be good through COVID. So you can buy and sell if you need to get out. Less than 1 day exit time. You get paid interest daily, which is nice. It's cool just to log into your account and see that you're getting paid every day. I believe they're one of the only peer-to-peer lending companies, or even just investment companies that pays daily interest. So that's a nice thing. They have very low loan to values on their loans. That range between 7 to 50%, with the average of 28%. They really good thing about LoanPad, they have a first position over the borrower, which is great. You always want to be in first position. No dealing with second charges or anything like that. They don't underwrite their own loans, but they do due diligence. God, you imagine saying that if you were drunk. They do their own due diligence on the loans, but they don't underwrite their own loans. So they don't have to have a huge staff to. Loan underwriting is quite a complicated process that involves a pretty decent sized team. LoanPad doesn't have that, and they don't need it, which I consider as a plus. Hamp Capital has a between 25% and 50%, last time I checked, skin in the game on each loan. I mean, that's really putting your money where your mouth is. So they're investing in their own borrowing. And profitability, they say, is very close. They're very close to being profitable because they do have low expenses. They're not in central London, so they don't have those high office expenses and staff expenses. And Louis, the CEO, has a really great relationship with his borrower, Hand, for a long time. He's been doing work with them for, I think, 13 years now. I've been to visit both LoanPad and the borrower, Hand Capital. I was very lucky to sit down with the owner of Hamp, and it's a small family business with quite a large amount of money. Upwards, I think, of 75 million pounds of their own cash that they lend out. So those are the pros. What's the cons? There's always cons. I have some neutrals here. Neutral again is they only have one borrowing source. So that could be seen as a pro and a con. With other companies, I would say one borrowing source would probably be a con. But with LoanPad, because of that existing relationship Louis has had with Ham for 13 years, I think that he knows really well about that business and what they do. And he's more comfortable just having one borrower than he is going to many different borrowers that he doesn't have that existing relationship with. So I kind of see that as a neutral, more on the positive side of a con than a negative. The downside of the con of having one borrower is that if something happens to Hanth, obviously that is major negative impact on LoanPad's business. But Louis doesn't really foresee having an issue with Hanth. So other con, you talk about relatively low interest rates, but interest rates are low right now, so there's that. And we don't have much of a default recovery history with LoanPad, so we don't know how defaults are really handled. And I personally have experienced some cash drag, so that would be considered a con. We got next up on the list, Cufflink. Their manual investment deal flow has been pretty good. They've got a pretty extensive property lending background that they've been doing even before they started the peer-to-peer arm of their business. They were, you know, lending money to property and doing their own property developing. So they've got good knowledge of that. They got 5% skin in the game that acts as a first loss. So 5% of their own money goes into most of the loans. One thing you need to know about that, they do have this thing called compounding interest that you can select if you want to roll your interest back into a loan that's paid out. You can do that. The thing that I don't like about that is that reduces Cufflink's stake in that particular loan, even though it's a small amount, but it's still, I prefer Cufflink to stay at 5%. And I want to see a peer-to-peer company with their own skin in the game. So Cufflink is also active in their community. They have a charitable foundation, and they have a secondary market that that I would consider a pro. And with the cons, they've got higher default rates. We've been looking at about a 16.7 average since 2016, which, definitely would like to see that lower. They've also had some decent results with their default recovery, so I don't know that they're necessarily too worried about the defaults, but obviously, if we could see lower defaults with a peer-to-peer property-backed lending company, that's ideal. They have a 0.25% secondary market fee. So if you sell a loan piece, you're going to get charged a 0.25%. Not the end of the world, but prefer not to see that. And one of the downsides of the secondary market is you cannot sell. So if, let's say you've got, let's say you want to buy £100 of a loan and somebody's selling £1,000 of a loan, you can't buy £100 of that £1,000 loan. You can only buy an entire chunk of whatever somebody's selling. That's a bit of a negative. And also, you can't self-select loans in their ICE, so you can only use the auto lend product, which I don't really like the auto lend product because it only pays interest out annually. I'd like to see interest paid monthly. And also, Cufflink tends to offer some second charge loans, which I don't love. I actually personally won't invest second charge loans, and they just don't pay enough on those. I mean, 7% on a second charge loan is not really acceptable. So that's the pro and con of Cufflink. Just reading through your comments. Chica Boy says, I'm getting my funds out of Crowd to Fund. They have not had any new loan for months, and I don't trust them anymore. Yeah, I don't have any experience with Crowd to Fund at all. David said, asking about your share picking because you're about to buy some to compare with trackers, not for tips. Okay. Yes, you're right. I'm working on that. I'm just getting an account open separately to buy that. And I'm waiting for funding to go through. Loanpad and Propland are very good. None of these two have lost any money. Chica Boy says pawn shops and naughty place. Chica Boy, come on. And Neil Patel, anyone have any experience with crowd property? Yes, I think you'll find a few people on here, Neil, that do. I've got some invested through there. Been pretty happy so far. It's early days, a lot of new deal flow. So I'm on the auto invest. It just trickles a little bit in there every time a loan comes out. But just really won't know for the next year what's going on with those loans and whether they turned out to be good or bad. I have good, hopeful optimism for crowd property. I think they're very experienced. And if you want to go to my YouTube channel, you can see an interview that I did with Michael Bristow. It's a 3-part interview when I was in London in January of, when was I? Was it this year? I can't remember. I think it was 2018. Might have been 2000. No, it was 2019. And you can watch the interview. I've also got a crowd property tutorial up on the YouTube channel. So you can see the platform, see how it works. It's a full tutorial. Chica Boy, we like your humor. Don't stop. Brings a smile to my face. Mr. Grubb says, I put most of my savings in gold starting 18 months ago. I've been putting new funds at each new level it's traded. I believe given the huge government debt in the US together with zero interest rates, a strong chance of fiscal defaults, it's got much further to go. So far, up 35% in 18 months. We'll be sticking with my strategy. Okay, I mean, gold is one of those things that market timing is extremely important. If you look at the historical gold charts, there's been some real volatility within gold. So I wouldn't like to say gold is a safe haven for investment money by any means, but I think it could be used as a diversification tool. I would just be very, very careful with that because gold spikes and gold falls. Look at the charts, the historical charts will show you that. I think in 20 years ago, gold was higher than it was now, maybe. Don't quote me on that, but I've looked at it and I don't think owning gold is a bad thing, but we'll see. John says, Lawrence, you sold all your pawn loans, not too negative regarding unbolted nowadays. Yeah, John, I was talking about my money thing loans because they had group asset loans that were within pawn shops, and the reason why I sold them was they were very easy to liquidate, and I wanted to reduce my balance with money thing. But no, I'm not too worried about unbolted. It's different. Unbolted is doing individual pawn shop style lending to different lenders, whereas money thing had these group asset loans. Cheeky Boy says I have no cash drag on LoanPad. Okay. Why do I have cash drag? I don't know. It's Alan, no cash drag. Peter, no cash drag. Okay. Well, I will take a look. John says cash awaiting investment on LoanPad does earn interest. It says so at the bottom of my loan book listing. Oh, okay. Well, I missed that, John. Thank you for telling me that. So that then I guess it doesn't matter if the cash is awaiting investment. Well, that should be added to the pros list then on the LoanPad. See, I don't always know everything. I miss some things. So cash awaiting gets paid interest. Okay. LoanPad, then I let you off the hook for that. Alex says, where is your LoanPad uninvested cash sat? If it's in your loan book, you're still earning interest, as stated at the bottom of the loan book page. I guess I didn't scroll down low enough to look, so there you go. Thank you for letting me know that. Yep. Thank you for that information about LoanPad. I definitely made a mistake. See, a good person can admit when he doesn't have the information, and so there you go. So Mike says new enhanced FCA register goes live on Monday. Yeah, it's going to be interesting to see what that looks like with the FCA register. So this stock market is looking pretty good this week. I still very, very surprised. We're down. I mean, today the FTSE was up a little bit, but Dow down 1.45%. It just doesn't seem to really correlate with the economy at all, but stock market's looking future towards the reopening of the economies. Everybody seems to be pretty bullish, but today we see a story in the Wall Street Journal that unemployment claims have gone up again, but they have been descending. So 1.4 million more unemployed for the week. So it just seems to be going sideways. But the stock market is generally bullish, and I still stick to the fact that I do believe that either a world tracker or a US equity index tracker is definitely the way to go. Not really about gambling on things like gold within the stock market. I just think it could be a part of a diversified portfolio, but um, yeah, I think for your average person who want to have to try to pick out what's going to happen with regards to sectors in the economy, that uh, just one track is the way to go for equities, even a world or a US. That's my take. I stick by it. I will stick by it until the day I die. Gary says, just check Coinbase. All crypto up today. Ethereum 12%. Yeah, I'm a believer in this crypto situation. I think. Oh, look at that. Yeah, I didn't check. Bitcoin's up a good deal today. 9,600 US. I think it's going to remain volatile for the next couple of years, but crypto, Bitcoin could really be the speculative play of the future for being used as a real tenable currency in the future. So I'm dollar cost, pound cost averaging into some Bitcoins. I'm going to make a video this week to buy uh, crypto on Coinbase to show you how to use the Coinbase Pro to save some fees. I'm just again waiting for for my Coinbase account to get funded with some money so I can show you how to do that. Yeah, Mike, there was a huge bet on for the hour and I lost again. So, what am I going to do? What's that frame CD behind me? That frame CD is a CD that I actually released along about 20 years ago. So it's some music. It's a music that I produced. It's kind of back in my music roots. It wasn't a big hit. I wasn't David Bowie or Sting or anything like that. But it's kind of one of those things you get to leave a legacy right behind. Produce some music, write a book, make a film, gets left behind, stamped in history. FCA is about to take over cryptocurrency promotion regulation. That's interesting. Yeah, I wonder how that's going to work. I think people that tend to be crypto investors are generally tend to be in the younger generation. It's not something the older generation really understands, and they're just more risk of tolerant. They can take risks, and they're young. I don't know about the advertising that it really makes a difference for them, but FCA is always seems to get their little grubby hands into the regulation of finance, and I don't know if it really that's a great thing or not. They seem to have cocked up some of the regulating in the past, so there you go. We'll see. You probably wouldn't want to hear my CD. It's painful music, but could I end the stream with it? I may. I may. If you're really smart, you could probably find it out there on the internet. But I'm not promoting here to promote music. It's I'm a little bit shy about my music, to be honest. I mean, if you heard it and you hated it, I'd feel so embarrassed. Um, but yeah, that's it. So anyway, we're 1 hour and 3 minutes. Next week, I'm gonna go through assets, capital, lend, invest, and octopus choices, pros and cons, why they're on my top 5 list. But we're gonna wrap it up this week. Almost got underneath an hour, but again, hit that thumbs up if you can. Subscribe to the channel. I really appreciate everybody tuning in and listening to me waffle on for an hour and 4 minutes. And yeah, have a good week. Be safe, be healthy, stay COVID free. Definitely enjoy life. Don't hoard money away. Spend a little bit on yourself. Life's more important. People come and go. We don't always live as long as we think we're going to live. So I have a 43-year-old friend of mine that passed at the beginning of 2019. It really made me think about, retirement. And he didn't make it to retirement. He's 43-year-old friend of mine, 1-year-old baby. So have a bit of a different mentality about hanging on to money now than I used to. So yeah, have fun, treat yourself a little bit. Do something good for your neighbor. Sea shanties from Grimsby. Yeah, Grimsby Town Football Club. Go Mariners. Good night, everybody. We'll see you next week, same time, next Thursday. Maybe there'll be some really interesting news. Hoping to see some news about rate setter, but we'll see. Have a good one. We'll see you next time. Bye.